Adobe stock is down 6.25% today, and the reason has nothing to do with the business itself. Adobe filed an 8K with the SEC that contained two completely separate disclosures. Item 2.02 reported record Q2 fiscal 2026 results. Item 5.02 reported that Chief Financial Officer Daniel Durn is resigning, effective June 15th, 4 days from the filing date. Markets priced one of those two items. It was not the record quarter. Source: SEC Edgar, Adobe 8K, accession 007963432600109. The 8K filed June 11th spans three material items. Item 2.02 covers results of operations, the earnings disclosure. Item 5.02 covers officer departures, the CFO exit. Item 9.011 attaches supporting financial exhibits. What made this unusual was the absence of any prior signal. No pre-announced transition, no overlap period, no news report before the filing dropped on Edgar. Durn's resignation and Adobe's record quarterly results appeared in the same document on the same day, with 4 days until the departure becomes official. That packaging forced investors to weigh two disclosures against each other in real time. They weighted the leadership gap more heavily. Source: SEC Edgar 8K, items 2.02, 5.02, 901. Why does a CFO exit move stock this much? Adobe operates three subscription cloud platforms: Creative Cloud, Document Cloud, and Experience Cloud. In a subscription software business, the CFO constructs the financial narrative that institutional investors use to build their models. Annual recurring revenue growth rates, net revenue retention, segment operating margins. That same CFO certifies SEC filings, runs the investor relations function, and is the person on earnings calls who guides analyst estimates forward. When that seat turns over with a 4-day runway and no permanent successor named, the pipeline of reliable financial communication breaks. Analysts face an immediate question: who speaks for Adobe's forward guidance next quarter? That uncertainty has an immediate market price. Source: SEC 8K, item 5.02. Adobe moved immediately to limit the damage. Stephen Day, who joined Adobe in 2006 and has spent 20 years inside the company, was named interim CFO effective immediately. His most recent role was leading customer experience finance, the division tied to Experience Cloud, Adobe's enterprise-facing segment. Appointing a 2-decade insider rather than an external candidate is deliberate. Day knows the financial architecture, the reporting methodology, and the investor relations relationships well enough to manage the next earnings call without a prolonged onboarding period. The open question is what the permanent search communicates about strategy. An external hire could reset guidance frameworks or shift capital return priorities. An internal promotion communicates continuity. That choice, when it comes, will move the stock again. Source: SEC 8K, item 5.02. Here is the part that makes this instructive beyond Adobe. The same filing that disclosed Durn's resignation also disclosed record Q2 fiscal 2026 results. In a normal cycle, record results would be a catalyst for the stock to move higher. But markets do not price a single data point. They price distributions of future outcomes. A CFO transition mid-fiscal year, with no permanent replacement identified and a search timeline measured in months, introduces variance into every forward model. Will guidance be reset when a new CFO arrives? Will capital return policy shift? Those questions cannot be answered until a permanent CFO is in place. Until they are, the uncertainty trades at a discount. Today, that discount is 6.25%. Source: SEC 8K, item 2.02. Three developments will determine how this overhang resolves. First, the permanent CFO announcement. Whether Adobe hires internally or brings in an outsider communicates how much financial strategy is about to change. An external hire with a different background could reshape how the business is presented to Wall Street. Second, the next quarterly earnings call, Day's first public test as interim CFO. Analysts will scrutinize his command of forward guidance and segment-level commentary. Third, any additional disclosure about why Durn is leaving. The 8K is entirely silent on motivation. If a reason surfaces in a follow-on filing, a media interview, or a regulatory document, it becomes the next catalyst for the stock in either direction. Right now, silence is a variable the market is holding against the company. Source, SEC 8K, Item 5.02. The 6.25% drop on a record earnings day is a clean illustration of a principle that applies across markets. Leadership continuity in key finance roles is priced as a separate risk factor from operational performance. Adobe's business, its subscription model, its cloud platforms, its customer base, did not change on June 11th. What changed is the certainty around who will be translating that business into financial guidance for the next several quarters. That uncertainty carries a cost. Today, the market put it at 6.25% of Adobe stock. The clock now runs on two parallel timelines: the permanent CFO search and the quarterly reporting cycle that will proceed regardless of who fills the seat. Source, SEC Edgar, Adobe 8K, accession 007963432600109, filed June 11, 2026.